It's 1:30 on your clock. It's time for Market Fatafat right here on ET Now. I'm Kajaria Ceramics, and over the next half hour, me along with my team of researchers as well as technical analysts will get you a wrap of all the 30 stocks you need to watch out for in your trading day. I have Soumya Sharma, Poonam Sane, Amit as well as Gaurav joining us from the technicals. Markets as we speak are trying to make a comeback. Nifty is trading with a loss of 22 odd points, but yes, inching closer to the 10,900 levels. Let's start with the countdown then. Stock number 1, Sun Pharma, has been the talk of the town for a whole host of reasons, a whole host of negative news flow. Poonam, talk us through the update there.
Karunya, the negative news flow has ceased to abate on Sun Pharma. The stock is now trading at nearly a 6-year low, coming in there post the huge amount of corporate governance issues cited by Money Life. In fact, it seems that we have seen good amount of trading volumes which have jumped nearly around 14x versus the 20-day average, and the trading value itself is at 1,500 crore. We're also seeing a rub-off effect coming in on Spark on account of the corporate governance issues that have been cited. Several institutional investors also seems to be concerned, as quite a few of them do have Sun Pharma as one of their key holding there.
That's right, and look at the kind of selling this counter has been witnessing all day, down 10.5%. Stock number 2 on the flip side, Future Lifestyle, looking fairly buoyant. Amar, what's your observation there?
Yeah, this stock continues to trade positive and remain positive. Overall, on the charts, the stock is trading with positive momentum. So one can look at buying on dips. Support for the stock is seen at around 390 levels, whereas resistance for the stock is seen around 422 levels.
Okay, moving on to stock number 3, Reliance Industries. Once again, a stock that's trying to lend some support to the markets. First Indian company to cross the 10,000 crore mark on the bottom line. In fact, the robust performance has been driven by consumer business, and even Geo and retail segments have witnessed a sharp upsurge in earnings. A lot of brokerages have given a thumbs up. CLSA with the highest target price of 1,500 retaining a buy stance. They expect retail EBITDA to rise over $1 billion in FY20. Meantime, Macquarie also has an outperformed stance. They see RIL providing growth for all reasons. They see upside risk to consensus. Moving on, Soumya, Punjab National Bank and even PNB Housing Finance are in focus. Talk to us about that exclusive ET Now story.
Well, according to what we learned from the sources, PNB has initiated partial or complete stake sale process in PNB Housing Finance. Well, although the company has said that it cannot disclose the potential investors due to confidentiality reasons, but what we learned from the sources is Blackstone, Carlyle, GA and Bertha Partners may enter the final lap for PNB stake. Well, the binding bids for this stake will be submitted in 2 weeks.
Alright, that's the big ET Now exclusive. PNB Housing down about 1.5%. Gaurav, Yes Bank trading on very high volumes today. Talk to us about what your observations are.
The stock has reversed from the 89 DMA that is placed on 207, 208, and the supports are seen at much lower levels of 185, 188. I would not recommend buying here. There is a breakout on daily charts above levels of 208, 210. So I would recommend buying either above the breakout levels, or you would play for and dip towards 191, 192. Stop loss of 187 and again targets of 202. At these levels, if somebody is already bought, can play with trailing stop loss, but fresh entry has to be avoided.
Okay, there you have it. Yes Bank trading at 200. Amar, KRBL is looking very upbeat today. What are your observations there?
I would say, looking at the long-term charts as well as the short-term charts, there is definitely positive strength in this counter, and today also the stock is up by almost 9 points, so 9%. So overall the momentum for the stock remains positive, but not at these levels. Only a correction and a dip can be used as a buying opportunity, because now the stop loss needs to be below 344, because that's a crucial support zone, and it has taken out the resistance which was mentioned earlier. So somewhere or the other on the upside, 390, 98, 99 is a crucial level of resistance for this particular stock.
Okay, moving on, stock number 7, Hindustan Unilever. They did deliver a decent set of numbers yesterday as well. The volume growth, CLSA says, at 10% for this size and base is extremely commendable. They also believe that the management continued to run a tight ship and LFL EBITDA margins were up about 140 basis points. Another key positive for the company. Commentary was fairly positive. Demand conditions also seem very stable, including in the rural markets. They maintain outperform target 2010. UBS has also come out with a note. They maintain a neutral target at 1800. They did say that the management has confirmed resilient rural growth and is close to end of large margin expansion. So that is something that's keeping them slightly conscious on the counter. Meantime, Soumya, Indoco Remedies is also buzzing away. What's the trigger there?
Well, the company has informed the exchanges that US FDA is inspecting the Goa Plant 1 facility since January 17. Well, the inspection of its other Goa plant was completed on November 21st.
Okay, there you have it. Indoco Remedies. Investors pushing the sell button on that counter. Meanwhile, Gaurav, HCC doing fairly well. What is your call on this stock?
If you look at the daily charts, you will see that it's been trading in a range. It has given false breakout. So I would recommend waiting for some more time. Play above levels of 1385. There will be a good range breakout on daily charts, and in which you can test levels of 15, and stop loss will be 1325. At these levels, do not buy, because we have seen multiple times the stock reversing from this level. It just touches the breakout level and then reverses. So better to wait some more time rather than getting stuck in the name. So for me, it's a strong buy above levels of 13.85.
All right then, Poonam, Axis Bank, the stock has been consistently falling since the word go. However, it's recovered a tad bit, but still continues to trade lower with a loss of 1.5%. What's the news there?
Right, that's right. In fact, Karunya, we're seeing that some amount of clarification is coming in from Axis Bank with regards to a 2,000 crore Hawala scam, which the Enforcement Directorate is in fact looking into. They're stating that this investigation is being conducted across several banks, and that the relationship with the entity goes dated at least till back to 2008, and Axis Bank is complying with various regulatory reporting norms, and they do not have any exposure to this entity. But this could not be really the reason why the stock is slightly under pressure. It's the stock also has been one of the preferred pick by most of the analysts on street, and it could be a general way of selling out there, Karunya.
Okay, 666 for Axis Bank. That's the level it's perched at. Meantime, Amar, Philips Carbon is really taking it on the chin today. Why?
I would say that looking at Philips Carbon, what we are seeing is that technically the stock is in a downtrend on the monthly as well as the weekly charts. It did consolidate, bounce back towards 210 levels, but then again we've seen sharp selling. So I would say that this is definitely negative for the stock. On the downside, the stock has got crucial support coming in at around 173 levels, whereas on the upside resistance is seen at around 193.
Okay, Philips Carbon for you down by 11% in trade. On that note, let's slip into a short commercial break, but before we do that, here's an important notification for all the viewers out there. As per the new tri-tariff norms, you can pay and watch for the channels that you like watching. Therefore, to keep watching Market Fatafat on ET Now, call your cable or DTH operator and get the Times Network value back.
Encourage you to explore the opportunities. This is the best time to be here. We have set up dedicated ways to help investors on a one-to-one basis. Above all, I assure you that I'll be always available to hold your hands in your journey. Thank you. Thank you very much. Thanks a lot.
Thank you. Okay, moving on and focusing in once again on the markets. We're in the thick of earnings season, so let's address an earnings candidate. Flashing on your screens will be the numbers of Kajaria Ceramics. The profits have come in at a healthy 64.8 crores versus 54.3, an uptick of nearly 20% YOY. Revenue has also grown 15% year on year at 759 crores. They've seen a good EBITDA growth as well, 10.9%. However, the margins have compressed a tad bit, 15.9% versus 16.6%. The stock price right now is a bit tempered, down 0.2%. Let's touch base with the management. Ashok Kajaria, the CMD of the company, joins us now. Mr. Kajaria, hi, good afternoon, and it's been a decent set of numbers for the quarter gone by. However, having said that, I just want to address the concerns over margin compression. Could you tell us what's the reason for that?
See, as you are aware, in the first 9 months of the year, the gas prices have gone up and up. And in the first 9 months, the overall impact has been to the extent of almost 45 crores as far as gas prices are concerned. And the quarter 3 has been the max because the gas prices were at the peak in October and started coming down in November. So that is the main impact. Nothing much has changed beyond that. And I'm sure if the Brent is kept at above levels, things should start looking up.
Thing that I was coming to, there's been a decent sort of a correction seen in the crude oil prices. Do you think one can expect some kind of a recovery in the next couple of quarters? Because the performance, especially on the margins front, has been under pressure for a few quarters now. By when do you see some kind of a recovery on the upside?
See, at the current levels, our EBITDA is close to 16%. I am sure if the gas prices are at these levels, we'll be able to maintain that. And the first 2 quarters have been under a lot of pressure, as you are aware, because gas prices this year have been very, very high. Gas prices are coming down, and if the Brent is maintained at the same levels, I'm sure we'll be able to do whatever we are doing right now at 16%, close to 16%.
But in the near term, I mean, the street is talking about a possibility of a gas price hike which may come through. Are you worried about that being another constraint on your margins?
No, gas prices have started slightly coming down. Gas prices are not going up. Gas prices have started slightly coming down. And I'm sure going forward, if the Brent levels are same, gas prices will further come down. Should further come down.
The volume growth, sir, that's something that the street would also like to understand. Give us some indicative guidance as to by when we can expect a good volume growth recovery, and what is the kind of growth you're eyeing on that front?
Do you not think that the volume growth which we are doing is good? Because in the early October, when we had the results of the second quarter, we had said that for 6 months we will do a 14 to 15% volume growth. And in the third quarter, we have been able to do about 16%. And I think in the quarter which is going on right now, we should be able to average out to 14 to 15%. And going forward for the year 1920, I think similar numbers should be there.
Great. I mean, it's great that you've been able to stick to the guidance and have been delivering on it as promised. Going forward, what is the outlook like, sir, within the building materials space? How are you reading into the industry at this point of time? What are some triggers that you're identifying for growth, the next leg of growth? What will it be driven by?
See, as you know, the tile industry has been growing. Last year, the year which went by 17-18, for the first time in so many years, growth has been negative. This year, the industry growth is flat. And going forward, we are looking at a scenario where the growth should be about 7-8%. And industry right now is tough because one of the key areas where manufacturing is done is Morbi. There, the industry is still working at 50-55% of the capacity. They have still not fully come under GST, because which is still a long way to go. I would say it will take another about 6 months or so when they actually really come under GST. But going forward, we see that industry should grow at 7-8%.
Perfect. Great, sir. Great connecting with you, and really appreciate you helping us understand what's happening in the company, what's the kind of growth you're eyeing, how the industry is also panning out. With that, Kajaria Cement seems to have recovered a fair bit from the day's lowest point. Yes, you can see that sudden spike up as well. Call it an ET now. In fact, the management has reiterated that the volumes have been extremely healthy. 16% growth as promised has been delivered by the management. Okay, moving on to another management voice. Let's understand from the management of Cyient what transpired in the quarter gone by. Mr. Ajay Agrawal, the president of the company, president and CFO, is joining us right now on the channel. Mr. Agrawal, hi, good afternoon. You trimmed your services business guidance from a double-digit growth earlier to about an 8.5 to 9.5 range for the quarter gone by. We understand it's primarily on back of ramp-ups, is it? Is it just a one-quarter blip? Will it get back on track post the fourth quarter? That is something that everybody on the street would like to know about. Could you help us understand the situation there?
Thank you so much. First of all, I think Happy New Year to you and to all your viewers. And as far as our performance is concerned, I think you are right. We did have some kind of a seasonality effect in quarter three. And the good news is that, this is only push out to quarter four. So between quarter three and quarter four, you will see a very robust growth. And quarter four is going to be very, very strong across verticals. And that momentum getting into the quarter one will continue. So there is no concern that, and whatever issues have come in terms of certain, projects getting moved by one quarter, I think those are very specific issues in one or two cases. We should not take it as a macro issue where, customers are delaying decisions or other things, because we are in engineering and R&D space, and the whole traction in engineering R&D space is very attractive, and sometimes I would also say is not necessarily comparable to what is happening in IT space.
Right. So you could you tell us by when do you see the services business come back in the black, and by when do you see yourself upgrading the guidance as well?
So I would say that, you will see that across verticals we will have very, very strong growth in quarter four. And I don't know what you mean by black and white, but we will give best quarter in terms of quarter-on-quarter growth in recent times in quarter four. That would be the proof, if that is what you call as black and white, and we will continue that in quarter one.
Okay, so we really hope you do. DLM side of the business is seeing good momentum as well. What's the run rate you're aiming here through FY 19 to 20?
See, as far as 19 is concerned, if you see overall on the design-led manufacturing, we have grown, we are growing year on year or full year, I would say 18 to 19 at about 35%. Standalone DLM is at about 20% plus, so we are on track. This is despite the fact that, the operating profit we are growing and operating margin we are improving, because we are letting go of some low profitability business as a cautious call, and you will see more and more focus on operating profit in this business going forward in financial year 20. It's little early, I would say, both in terms of capacity as well as the order book. We are placed very nicely in design-led manufacturing. There is no reason to believe that, we have been growing at about 20% for last number of years. There's no reason to believe that that kind of momentum will not continue. But I would say you need to give us some time. We are in middle of our planning with the customers and internal planning. I think by next quarter we would be able to give you more precise outlook on financial year 20.
Just one more question very quickly before we let you go. What's the cash on the books, and how much of that are you earmarking for your for return via buyback in the fourth quarter? There's been no return for a shareholder if he's had your stock for a year. What is it that you'd like to tell them?
So I would say that, from the perspective of the shareholders, one is that, the return is steady. We have been giving about 40% dividend payout to all our shareholders. I think we are continuing that, and we have already given interim dividend. We will give further dividend to make sure that we at least give 40% dividend. As far as cash on books is concerned, we have the highest ever cash in the history of the books, about 1230 crores. And as far as the buyback is concerned, we have looked at, the need for the investments, because we do have extremely good investments for the next few years, and also looked at, the investor returns. We are doing that trade-off, and I think very soon, within this quarter, we will give you more details about the buyback.
Great. We all are awaiting very keenly for those details. Mr. Agarwal, thanks much. On that note, we'd like to wrap it up on this edition of Market Fatafat as well. It's a goodbye from me and the entire team.